Good day, everyone. Today, we analyze the performance of the Indian rupee, INR, against the US dollar, USD, from April to June 2025, with a particular focus on how the 90-day tariff pause, global trade pressures, and domestic economic policies will shape India's currency dynamics and trade balances. I am Matteo, AI assistant of Dr. V.V.L.N.Sastry, jurist, financial economist, international arbitrator, and Fulbright scholar. I am narrating the inputs given by Dr. Sastry. INR versus USD outlook. As of April 20th, 2025, the Indian rupee is trading at approximately 85.74 Indian rupees to 85.78 Indian rupees against the US dollar. Analysts forecast a potential range of 85.50 Indian rupees to 86.50 Indian rupees for the INR over the next 3 months, factoring in tariff pauses and broader trade uncertainties. The 90-day tariff pause. On April 9, 2025, President Trump announced a 90-day pause on new tariffs targeting India, following heightened tensions over trade imbalances. This pause provides India with a temporary reprieve, offering breathing room for businesses and exporters. The pause is expected to last until July 2025, with the potential for tariff negotiations to restart depending on economic developments. Impact on exports and imports. Exports. The tariff pause offers a short-term boost to India's exports, especially in sectors like textiles, electronics, and gems and jewelry. India's exports to the US could gain relief, mitigating losses caused by previous tariff hikes. However, it's important to note that the US-China trade dynamics will still impact India's share of the American market, even with the pause. Imports. India's imports of crude oil and high-tech components could also benefit from the pause. With reduced trade barriers, the cost of imports could stabilize, positively influencing India's trade balance and currency. India's oil imports, which account for a significant portion of its trade deficit, are likely to see more stable pricing. Trade balance and currency impact. India's trade deficit was $21.54 billion in March 2025, driven by high import costs and stagnant exports. The 90-day tariff pause may improve export growth, but India's overall trade deficit is expected to remain under pressure due to rising demand for imports, especially in high-value sectors like electronics and oil. Export potential. India's merchandise exports are expected to show moderate improvement due to the temporary removal of tariff barriers. However, it is expected to be a short-term benefit, with only marginal long-term relief as global trade tensions persist. Impact on INR. The INR may experience some stability during the 90-day pause, as reduced tariff pressures could lower the overall trade deficit, providing temporary support for the currency. However, after the 90-day period ends, the INR may face depreciation if tariffs resume, especially on critical sectors. A volatile global trade environment may continue to place downward pressure on the INR. Sectoral impacts. Electronics and textiles. These sectors will likely see immediate relief from the pause, as the tariff pressure on Indian exports to the US is temporarily alleviated. Agriculture and pharma. India's agricultural exports could benefit from stable demand in markets like the US, while the pharmaceutical sector could continue to thrive due to increased global reliance on Indian generics. The pharma sector might not be as impacted by tariffs in the short term due to essential nature of products. Monetary policy and inflation. The Reserve Bank of India, RBI, has maintained an accommodative stance, reducing the repo rate to 6% in April 2025. This supportive monetary policy, combined with the tariff pause, could ease inflationary pressures and support growth. Inflation is at a 5-year low of 3.34%, creating room for further rate cuts to stimulate the economy. Conclusion. In conclusion, India's economic outlook for the period up to June 2025 remains a mix of optimism and caution. The 90-day tariff pause provides a window of opportunity for India to enhance exports, stabilize the trade balance, and strengthen the INR. However, the sustainability of these benefits remains contingent on the global economic environment and the potential resumption of tariffs after July 2025. As we move forward, strategic efforts to improve the trade deficit, boost domestic manufacturing, and maintain a flexible exchange rate will be crucial for India's economic resilience in the face of external pressures. Thank you for your attention. If you like this video, please share, like and subscribe to our channel.